Okay, so let's get right into it then. This is the oil market on the 1 hour time frame. So let's have a look at what oil is doing. So currently oil is trading at 82.80. We kicked off the week at just below $86 a barrel, and we had a good significant drop from the high, just over 4%, actually 5%, to 82.18. So that support area that we've hit and broken so many times, we remain around that area again. Looking at the bigger time frame, this is the daily chart now. This is where it gets interesting. Again, I can see higher lows being created. So there's a wedge pattern also being formed, and as this gap narrows, there's not much room left. The pressure is being built up, and I can see a surge to the upside. On the line chart, we can see it more clearly. As we get this wedge gets smaller and smaller, we'll see a burst out to $90 a barrel. So that's what I can see for oil. So the diesel market will remain flat for next week. Then, has not been much. The volatility has been increased, but again, it's sort of range bound between them two areas. So moving over to sterling, we kicked off sterling at the big psychological area above 120, 120.36, and then on Tuesday we dropped down quite significantly. Dollar did make a good rally. One of the reasons was because the chairman of the Federal Reserve, Jerome Powell, he was testifying in front of Congress, and he mentioned something interesting, that inflation isn't dropping as quickly as they expected to, and they had a target for inflation of 2%, and interest rates they were looking at 5% target, and they'll hold. However, with the strong labor market in the US, with the NFP jobs created 500,000 last month, and inflation not dropping as quick, he has signaled for interest rates to go higher than expected. So therefore, the dollar is back on the rally. The market is looking to price in a 0.5, which is 50 basis points rate hike for the US in the next FOMC central bank meeting, which is in 2 weeks' time. So that will be interesting. However, they are data dependent on two major key indicators. One is tomorrow, which is NFP, the jobs market. So I'll see how many new jobs were created in the US. And secondly, the inflation data out for the US, which is next week. So depending on these two data releases, it looks like the interest rate, the tightening cycle for the US hasn't stopped, and they will continue tightening. And if that is the case, we will see sterling weakening in the bigger picture. This is the daily chart, and I do see sterling coming down to maybe 115 area. Again, that's the next psychological area, around about there in the next weeks and months coming up. So back to the diesel market, it will remain pretty much flat then, and that's all. If you are interested in AdBlue tanks or fuel, by all means click on the link below and get in touch. I'll be more than happy to see how I can help you out. And that's all. Join me again next week.